The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off, 24 minutes to go until the start of trading. Markets open in negative territory last night. Futures open, dipped below 6,900 briefly, and right now we're positive by 7 points, up by 0.1%. The S&P is 69.53. NASDAQ 100, similar action. You opened lower last night. Right now, barely in the red. Off by 8 points, 25,729. You get the Dow right now. Positive by 67 points, up 0.1%, 49,329. The Russell up by 2 points, 2681 after hitting all-time highs on Thursday at 2749. Bitcoin down about $1,600, off 1.8%, 87,900. We jump to yields. We got a Fed meeting on Wednesday. Yeah, 2 days from right now. It is Fed day. The 10-year right now, positive by 4 ticks. We got a 10-year yield, 4.21%. 4.21%. And, man, we got some dollar weakness. Check it out. 97.16. Now, check out the weekly on the dollar last week. That is quite a decisive week to the downside. We're continuing that trend right now. You got lows out here from September of 96.21. And in June of 96.37 right now. We just hit a 96 handle briefly. We're trading at 97.15. Dollar weakness, dollar weakness yields a little bit lower. And yet again, it's a story of metals. Check it out. Gold. We just hit 51.07, folks. 51.07. Let's put it back to a short-term time frame. There's your acceleration last night. We're up by $85 or 1.7%. And silver's the story again, up 8%. We just hit 110. So much for 100. We just hit 110. Oh, man. Now, you look at this acceleration we've had in silver. We got an A to B, C to D. You're blowing it all away. I mean, there's nothing to chart here when you're going this far higher. We're breaking every single level. And it's, you back things up, all right? Remember when we were breaking above the highs of $50? Yeah, we're at 110. Okay, look at this long-term chart, folks. Remember the world we're in. Things are getting a little parabolic, to put it lightly. We've seen these types of runs in commodities before, in particular, okay? Doesn't mean that they're going to go back to zero or even go back to 30 or 40 or 50, but things are getting pretty parabolic at this level, folks. Silver's up 8%, and if you want to say that it's a destruction of the dollar, right? It's a store of value. Maybe it's a factor of, you're talking about simple supply and demand at this point, okay? And it's something that when gold's up 1.7% and silver keeps going up 10% a day, okay, be very careful in that market. That chart says it all. No matter what time frame you go on, man, silver's on a straight run move from $25 up to 110, and realistically, all right, no pullback whatsoever. You break above that all-time high area. Silver has volume on the move up to 90, but last week you dropped off a bit. We'll see if it carries forward. You jump over to platinum. It's everywhere. Platinum's up 2.9%. So you got gold up like 1.7%. Platinum's up 3%. Silver's up 8%, right? You jump over to copper right now, up less than 1% right now. But, boy, we got metals rocking. You jump over the VIX right now. Volatility index, 1647. You jump over that 5-minute, 1646. We were above 17 briefly last night as the market was cascading lower. And right now you're back at 1646. And yeah, how about metals? All right, I want to take a brief moment and talk about what happened on Saturday. And it's unfortunate that things get so heated. I was in the den, of course, this weekend. And here's what I'd just like to say. It's unfortunate when I see, okay, the discussion of our constitutional rights. And this actually doesn't have to do with the reason why federal cops are in Minnesota. They're obviously related, okay? The reason why Alex Preddy was there is related to the reason why they're there. The reason why they're there matters, okay? Context matters. But no matter what reason you have federal police, no matter any type of police officers conducting police behavior, the words out there that are being put out in terms of this gentleman showing up to murder cops, showing up in terms of, maximum damage and carnage, and you're talking about he wanted to do maximum damage and massacre law enforcement, okay? And then you have the director of the FBI out there, okay, when you talk about gun rights, saying that you can't show up, and this is the quote, folks, okay? This is what makes no sense. You have an American citizen that shows up with a phone in his hand, and thank goodness there are people filming what's going on. Otherwise, all we'd have to go off are the accounts of the administration officials who say that he showed up to massacre law enforcement. We all know that's not what happened, okay? And you have the director of the FBI saying you cannot bring a firearm loaded to any sort of protest. You don't have that right to break the law and incite violence. That goes against our Second Amendment. I can't believe I'm the one out here talking about that it's so clear as day that it goes against our Second Amendment for a citizen that has a right to carry a gun. And you take at word Noam what she said, okay, that he showed up. It looks like a situation where he wanted to do maximum damage and massacre law enforcement because he exercised his Second Amendment right and because his First Amendment right, okay, of just being there with a phone. His First and Second Amendment rights were trampled all over within 15 seconds, and now he's being labeled as a terrorist, an assassin, and somebody that showed up to massacre law enforcement. And those are the people that are supposed to be in charge of serving justice. And that's the most difficult aspect of it, okay? He is allowed to carry a firearm. And I can't believe that's where the discourse has gone, that somehow, okay, you have the Treasury Secretary out there on the Sunday shows yesterday asking the panelists if they've ever shown up to a protest carrying a gun, that somehow exercising our Second Amendment rights is enough to warrant the government killing you. That's the argument being made, and the fact that they're smearing him and saying he showed up to massacre law enforcement because he was simply a man exercising his Second Amendment rights. The pushback on the narrative is what I find so important, because those are our constitutional rights. And I cannot believe that there's not shock and horror that somehow a person in an open carry state can show up open with a concealed carry permit, and that somehow that is used as grounds to paint them as a terrorist. To paint them as a terrorist for exercising their Second Amendment rights. Okay? Hear the words of what Ms. Noam said. Okay, that he's a terrorist, that he showed up to do maximum damage and massacre law enforcement. It's not what happened, folks, and it has nothing to do with the two topics. You can support what the president's doing and support nothing what happened on Saturday. We'll come right back and talk markets, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got the S&Ps up by 7, NASDAQ negative by 13, Dow up by 65. Let's jump around to some of the banks. It was quite a week for the banks last week, and Friday especially. All these bad ticks all over these banks unfortunately ruined the charts. Yeah, JP Morgan, jump over to Bank of America. We got them everywhere on these banks. Quite a rip lower on Friday, though. Bank of America, you rip lower. We're going to be slightly in the green right now. Let's jump around to some of the big dogs. You jump over to NVIDIA shares. Yeah, quite the acceleration on Friday. We're going to be slightly in the red for NVIDIA. Off almost $1 to 186 and change right now. All right. So, for you Northeasterners, I hope you're staying safe this morning. Not even Northeast, across the whole country, right? Travel chaos set to linger as the airlines try to restore flights. But boy, you talk about it. 3,500 flights canceled on Monday. Yeah, as of overnight, that's down from roughly almost 12,000. Yeah, you're talking about 15,000 flights that they got to make up. And yeah, I said Northeast. No, you're talking about the South, the Mid-Atlantic, right? It's the whole country besides Florida. American, the hardest hit. Scheduled, canceled, 56%. JetBlue, 72% actually in terms of where they are, but in terms of raw number of flights. But check it out, right? JetBlue, they're going to make up 72% of their flights. All right, American, 3,100. Delta, United. Let's go down the airlines. American, yeah, 1448 right now. You trade lower from
as that storm became apparent last week. You jump over to Delta right now, slightly in the red as well this morning. JetBlue, they're their own animal. Let's check out JetBlue. I say their own animal, as in just can't find a bid in this equity. A little bit of strength last week. And just like most of the airlines, basically flat so far this morning on JetBlue. All right, we jump to the Federal Reserve on Wednesday. So, the Fed, expected to keep rates exactly where they are. You look about the probabilities, 97% chance the Fed stays where they are right now. 3.5 to 3.75% the overnight rate. Outlier probability of 2.8% that they cut. You go out to the March meeting, market's still 84% chance we get nothing. You go out to the April meeting, it's about a 3-to-1 probability that we get no cuts by then. June 17th is the first meeting with a new Fed chair. That's when the scale tips a bit, and the market says, we think that's when we may get our cut. There is still a 41% chance that we get no cut by the June 17th meeting. I mean, tell me what the world looks like if we get no cuts for the next 3 meetings, and then Trump puts in a new Fed chair, and they say, you know what, Powell is right for the last 3 meetings. We're going to get no cut as well. I feel like that the market is underpricing the probability of a cut, at least by June. And then you go out to December, and what's remarkable is 1 to 2 cuts. The next Fed chair gets 5 meetings. 5 meetings. And right now, the market is assigning almost a 42% chance that we get no cuts or 1 cut all year. Okay, I think rates are on the way down when you're talking about the 2-year at least. I often talk about we'll see how the steepening goes, okay? Because guess what? The 2-year has higher price, lower yield. But the 10-year has not followed suit. We're at 4.22 this morning, okay? And we're not even near the highest prices we've seen. We're below where we were in October. We're below where we were in April. We're below where we were in September of last year by a long ways, okay, on the 10-year. And when I say below, that means yields are still much higher. We're below it on price. We have higher yield, and you got higher yield from where you were in 2023. So the next battle is going to be how we push forward when it comes to the steepening. If we do get more cuts than the market's expecting, which I imagine we will, does that even translate to the 10-year, though? Yeah. All right. And you jump to the dollar, tied into it. 4-month low is gold tops $5,000. You better believe it, man. Now, we'll talk about the yen as well. That was quite a move last week in the yen. You jump over to your gold contract, up by 1.9%. We take a look at the dollar right now. And, check out last week's move. Decisive move. We're continuing lower right now. And we are right at the lows of June and September. And think about it. Right now, we have dollar weakness. Even when the market is only pricing in 1 to 2 cuts over this entire year, okay? So when I look at this scenario, I say to myself, which side of the coin do I want to make a wager on, right? Which side is underpriced or overpriced? Well, you could say to yourself, the market is overpricing how many cuts we're going to get, right? We're getting 1 to 2 cuts potentially right now in the market. You could say, I don't think we're going to get that many. The market's pricing in too many cuts. Well, if that's the case, we should have less cuts. We should have higher yield. You should have a stronger dollar, okay? My view is that the market's only pricing in 1 to 2 cuts right now, man, okay? Over the course, even cut out the 3 meetings that Powell's in there, right? Maybe they're going to give some pause. The numbers don't have the clarity they want. They're going to wait for the new Fed chair come June in their meeting, May when they get put in. Fed chair still's got 5 meetings, man. 5 meetings. Okay, we could get 3 cuts from the next Fed chair, and that's just if they cut for the first time in June and then go 1 break, cut, another break, pause, and a cut. I think that's like the minimum case, 3 cuts. Aside from, of course, inflation raging and the job market picking up. But that isn't in the data right now either. So when I look at the dollar, I say to myself, man, the dollar's trading at 97, and the market's only pricing in 1 to 2 cuts right now. Okay, what's the probability they price in 3 cuts? I just laid out the probability. Okay, I think there's a high probability that we get more than 1 to 2 cuts this year. And if we get more cuts, pressure's going to be on the downside for the dollar. And you're at a critical area, man. You're at the lows of 2025, okay? And on a much longer term basis on the dollar, You break below here, 90 is the immediate next stop. That was the lows of 2018. That was the lows of 2021. Okay, and that was also an area where you had an area of resistance. All right, and you even back it up to the highs of 2009. You were at 89.62. 90 is the next area. You just look at this visual area, support and resistance, ice. Doesn't get much cleaner than that, man. All right, 100's an area too, right? We're below 100. 90's the next stop, man. Okay, and we're going to get some volatility in between it. These are not going to be straight line moves coming up this year. There's a lot of volatility. You see it in the Fed forecasts. A tremendous amount of volatility in terms of where rates are going to be. And we live in interesting times, man. We got a new Fed chair. We have the dual mandate at odds in terms of we still have inflation pushing 2.5, 2.7%. And you have job gains. Jobless numbers are fine. But the number of jobs this economy's adding, it's worrisome to the Fed. At the same time, you have inflation at 2.7. That's going to create some volatility. Dollar at 97. Gold's $5,074. Silver, we'll call it 110. We're coming back for the opening bell, folks. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's up by 8 points right now, 0.1% on the opening bell, and we just touched that area we had on the open on Friday. We were there at about 11 a.m. Eastern time, and we'll see how the day progresses as we're in the first minute of trading. But interesting S&Ps. We hit right on that price level, up by 7 points, 69.53. Dow's up 50 points right now. Russell flat. Bitcoin down about $2,000. You jump over to NVIDIA. So NVIDIA right now, we'll call it flat, down by 6 pennies. They're pumping more money into CoreWeave this morning, folks. CoreWeave up by 13%. We jump over to the story. $2 billion is what they invest more, okay, into CoreWeave. They're already a massive investor in CoreWeave, okay? This is the circulatory deal that we're always referencing here, and it's happening again, of course. And yes, it does matter, okay? They invested an additional $2 billion to help speed up an effort to add more than 5 gigawatts of AI computing capacity by 2030. Well, how do you think CoreWeave is going to make sure that they add more capacity? They're going to buy NVIDIA chips, man. Okay? NVIDIA is investing in an CoreWeave that CoreWeave is then going to have to buy NVIDIA. Yeah. NVIDIA has already agreed to buy more than $6 billion in services. Okay? It just goes round and round and round, whether you're buying the services, whether you're selling them chips, okay? The investment is confidence in their growth and confidence in the management and confidence in the business model. Well, it's just an investment in their own investment. That's all it is. The deal is just a late example of them using their resources to propel the industry. Now, if you recall, when they went public, CoreWeave couldn't even push out their shares to the public unless NVIDIA ended up backstopping the IPO. Yeah. So the CPU, which carries the Vera brand, marks the first time the company has offered such a chip on a standalone basis. This means NVIDIA will be challenging Intel, AMD inside data centers. The NVIDIA investment's going to shore up their finances. And here's the thing. If their finances weren't sure, then why is NVIDIA the only company that has to come in and shore up their finances, right? Under the agreement, NVIDIA will assist with the purchase of land and power for data centers. It will also market their AI software to cloud partners. And then, yeah, that's only 2% of what CoreWeave plans to spend to bring new infrastructure online. Now, when they were going public, CoreWeave, all right, one of the big pushbacks on their IPO was, and it's remarkable, they struggle to push it out. You accelerate up to 187. We backed off all the way to $63, and now we're going to be at 113 like that. I mean, not hard to understand, right? Why people enjoy trading these equities when you get an equity down 60% and then almost doubling in price over a period of almost 6 weeks. But one of the pushbacks, all right, and I'll try and see if I can find the articles, was that they were coming to market at a time when they actually were going to have tremendous infrastructure costs because many of the chips that they had in their data centers were old when it comes to AI. That was one of the pushbacks that they got. And here we are talking about that now it'll be fine because NVIDIA is going to shore up their balance sheet. One of the risks that you want to keep on your radar. We jump around to some of the others, man. NVIDIA, they're higher. Microsoft, slightly in the red this morning. We jump back. We got markets in the green, man. S&P's up by 20, not Microsoft, down by 0.4%. Meta, up by 0.4% this morning. Google shares up by 0.5%. Amazon, flat, 239 right now. You jump over to Tesla. Down about 2% for Tesla shares, down $9. We check in on the airlines on the open. Delta down 1.3. American off 0.5% right now. United off 1.2. And JetBlue down 2.2%. Yeah, percentage-wise for their flights, down 2.2%. And yeah, like 60-70% of their flights got canceled. Remarkable. All right, we jump over to crude. Spiked to 61.71 overnight. We're back negative by 31 pennies at 60.77. All right, let's take a look at some of the... Now, gold, folks, okay? Decent volume the last couple weeks. And this has quality volume on the way up, period, right? You look at that acceleration in October, you pull back on lighter volume. Now we're doing it again on some decent volume, but still does not compare to the volume we had at the October highs. Okay, it doesn't do it. You jump over to silver right now. There's your October highs in silver at $50. Now, silver had volume on this move. It did. Not above $90 though. Okay, silver's now up $20 from even where you were on that acceleration the week of January 12th. Okay, maybe that's the pullback. There's your 1 to 1.618 expansion, right? There's your ramp up on volume. Now we'll see what happens this week. That was a short trading week last week. Still doesn't compare to the week we had January 12th. You do 563,000 last week, going into 875. Okay, and on a lot of equities, folks. All right, I'm going to have a new issue of the gold report out shortly after this program. I got all the mining equities done, just putting some finishing, polishing. And, you know, you look at some of the run up, okay, on some of these equities, and I'm just jumping around. You know, you look at some of these volume spikes from April, yeah, but then you look at some of the volume we had sustained on the run up. Look at AEM. I'm just cherry picking, okay? But you were doing almost 15 million shares for 2.5 months straight on a weekly basis, right? You go back to September, okay? 14 million, 14 million, 22 million. You break to 160. We haven't seen a week since then on September 15th, right? But then we had 14 million, 15 million, 15, 16, 17, okay? We did 12, 13, and 12 the last 3 weeks. 12, 13, and 12. You were doing 14, 15, 16 million every single week for almost 9 straight weeks on that October run higher, okay? And meanwhile, we've now traded from 172 to 220 on lighter volume over the last 3 weeks. All right? Look at Harmony. Okay, look at the volume profile in Harmony. You back it up to September, you back it up to September 15th, you back it up to the October highs of 33 million. Okay, look at the declining. Every single time. Last week, okay, you get the holiday weeks in there, but last week you only did 19 million shares on Harmony. Not encouraging. And I'm just, again, you can jump around to a lot of different equities. All right, I didn't even plan to bring up these equities. Let's do it. Yeah, Barrick. Look at the run-up in Barrick. Look at this acceleration, quality volume to the upside, quality volume. Now, you got decent volume last week, but you're talking about 70 million shares. Look at the run-up when we really get volume. This is not the... We haven't had quality volume. So, volume-wise, even on some of these equities, folks, all right, be careful. We'll come back. I'll take a look at some more equities. Because longer term, gold's going to be fine, man. Okay? The dollar's in trouble. Gold's going to be fine. But shorter term... You know, things are getting a little parabolic. Another great example. The week of December 15th, real gold, you're up to 230. We got no volume since then, and you're at 290. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the S&P's up by 26 points right now. Market pushing higher, 69.72. NASDAQ up by 0.25%, 25,800. The Dow right now, up 0.33%. The Russell up by 0.25%. You jump back to gold and silver. Gold up almost $100, 5,077. You jump over to silver, up by 8.5%. And jumping back to just some of the gold equities, folks, that are in the gold report, there's just a worrying trend, okay, that some of these equities, and it's not like volume is non-existent, okay? Gold is everywhere right now, okay? Yes, there's volume. But look at the volume this is Goldfields, okay? GFI. First of all, you get an A to B, C to D. Brings you up to the 1 to 1.618 expansion. That area is about $40, okay? That was your first acceleration. You break above there with some decent volume August 4th. You come up to that area September 15th. Look at the volume you got. Almost 20 million shares. Okay, you do 20 million shares 1 week. 2 week, you take a break at the end of September. You do it again. 20 million October 13th when we make that high. You pull back with the most volume we've had since that April volatility, right? 24 million shares, you trade lower. Now, since the holidays, okay, you back it up to Christmas, you're at about $45. We're at $57 right now. Okay, and this volume over the last couple weeks, we just traded from $44 to $57, and you're doing 12 million, 15 million, and 15 million. That's nothing compared to doing 20 on the regular when you were at about $40. So this is the worrisome part. And, why don't you have any volume on this move higher? Well, maybe you just don't have any sellers. Right? But when they come, folks, they will come, and they will come. Okay, this is getting parabolic. You put things on a monthly basis, right? Check out the chart and say to yourself, look at the times that the chart's going vertical to this aspect, and then look at some of the declines that follow. Doesn't mean it has to happen, okay? But telling yourself this time's different, protect yourself if you've had a run up. We're going to have more opportunities in this market. Silver's got volume at $90. We're at 120. Okay, and you're going to get some volume this week. Of course you are. This is we'll put it to the daily. This is quite an acceleration. But I look at equities like that when you talk about GFI. That's your daily. You go back to the weekly. Okay, not encouraging. You want to see this type of volume. We broke above this area on lighter volume, period. That's the story. Okay, let me see which other ones jump out at me. Newmont to a degree. Okay, you jump out. I mean, this volume we've had on this parabolic run recently is unimpressive. Doesn't mean it's non-existent, but it's unimpressive. All right, even some of the strongest equities out there that aren't even in gold. CCJ, I love CCJ. All right, look at how we just broke above that October 27th high, though. Right? And I'm a holder of this one longer term, man. But you could easily see a retest of 100. We're up another $3 right now. You break above this October 27th acceleration where you do 47 million shares, right? You come into Christmas week. I mean, imagine, since December 15th when CCJ was trading at $84, you have a sign of strength. The first week back from the holidays, that's for sure. You trade up to 115. But since then, you're doing it on lighter volume. Nothing that compares to these weeks we had down here on CCJ. You want to see more volume than what's going on here. And I'll finish it up with this one, Alamos, AGI. Look at the volume we had in the beginning of the year on Alamos, right? Great uptrend channel. You've gotten a little bit overvalued to the upside of that. Okay, look at the tremendous volume you had all year, going from this area that we were at about $25 in March, right? You do all that volume, you finally break away from that area in August. Then you look at the volume we had at the October highs in Alamos Gold, okay? And look at the volume we've had since this equity's traded from $34 to $44. So on a short-term basis, yeah. Okay, I think that this market's a little overvalued. And I think that you can expect a pullback. And, you know, when does that bubble burst? And it's not a bubble like it's going away like the real estate bubble, folks, okay? But this market needs to breathe a little bit. And we're getting overvalued on lighter volume. I mean, look at that volume chart, right? Massive volume all year long. This equity was doing 20 million shares left and right. We can't do more than 10 to 15 million shares maybe on this run up where we've went up 50% in price. Alamos has went up 50% since the week of their earnings, October 27th. And meanwhile, the volume can't get above 15 million shares. You just went from 30 to 45. That's not quality volume to the upside, folks. Okay, so put it on your radar. You want to see more volume on some of these equities. Now, you know, silver has it at $90. They do. There's no denying it, but gold does not. Okay? It sticks out like a sore thumb, this acceleration, the highs of about 43.92. You've had decent volume in the last 2 weeks, but doesn't compare to the 3 weeks we had at the October highs, and it definitely doesn't compare to this ramp up that we had. So keep those spikes up. When I was going through all those equities this week, you know, there's a trend, and it doesn't go the other way. There's not many equities, if any, okay, where you have it smashing the highs and the recent run up is in volume. A lot of the equities right now, okay, now silver's an outlier. You got some volume in some of the silvers. Look at Pan American. Okay, you're breaking above this channel, but yeah, at least you got volume. Right, one of the stronger equities. There's no drop off. Look at the nice ramp up. That's how you want to see it, man. Pan American. Okay, now these are holiday weeks, but still, right? Week of Christmas, week of New Year's. You come back January 5th, you do 29 million, then you do 34, then you do 42. That's how you want to trade, man. That's not how a lot of the equities are moving. Jump over to Hecla. Again, looking strong. Okay, but those gold equities just, you know, heed what I'm seeing on the charts, folks, because the volume on some of those equities, man, it's not quite there to carry it through, even though things are going wild right now. Tell you, for the first time in a while, and I don't think I would ever shorten the gold report, folks. That's not what it's for. It's a longer-term investment vehicle, swing trading, okay? But at this point, I find myself from my own trading considering it for the first time. For the first time, silver at 110 and gold at 5,100 without breathing on a shorter-term basis, okay? I'm looking for a retest of the October highs in golds. That's it. And some of the equities will line up well on that too, okay? And we will get a pullback. And maybe we're just at max volatility and unknowns right now. We got a Fed coming in. We got rates. We got curve steepening. We may get a new Fed chair this week, right? But yeah, when you talk about volume, okay, pay attention to those charts because it's just not there. If you want to try out the gold report, folks, check it out. I'm going to have a new issue out shortly right after this program. And yeah, we got quite a market. And we're going to have a market this year. I think the dollar is just beginning. in terms of, I think 90's in the cards for the dollar, man. Dollar's down another 60 pennies today. Quite a move last week. Look, we're approaching the lows already. 97.01. We're going to hit a 96 handle maybe by the time we hit the break. Let's go, dollar. Cooperate. 97.01. All right, folks. S&P's up by 29. NASDAQ up by 72. We'll be right back. One more segment, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's up by 0.5% right now, up 33 points. Markets gets a lift. NASDAQ up by 0.3%, 25,823. And you got the Dow up 183. You jump back to metals. Gold up 2.2%, 5,088. Silver back pushing those highs near 111. And yeah, we got some dollar weakness continuing. We hit 96 and change over the break. We're at 97 on the dot right now for that dollar. Hey, we got a lot of listeners in the Northeast. How about Bob's Discount Furniture? Remember those ads? Hoo-wee. Now, Bain Capital buys this company. Okay, they acquire a majority stake in 2013. Okay. was valued at approximately $350 million. Now, at the time, they had 47 stores in the Northeast and the Mid-Atlantic. 47 in 2013. Well, here we are 13 years later. They have the number in here. 200 stores across 26 states. Plans to grow beyond 500 locations over the next 9 years. Founded in 1991. Now, here's the kicker, okay? They say they have income of $80 million with revenue of $1.72 billion over a 9-month period ending September 28th, okay? So for the first 3 quarters of last year, they made $80 million up from $50 million. Well, if you just extrapolate that out, maybe they're making $100 million a year, okay? They're going to be valued at $2.5 billion. 25 times earnings per share for a discount retailer, and always question, folks, when they are pushing paper out to the public, that means that they think that it might be a good time to get the value for that company. They're in the cheap furniture business. Okay, so I read that and I say to myself, is there any reason why cheap furniture is going to be a hard business to go forward? Yeah, you better believe that tariffs could come into play for cheap furniture. Be careful about Bob's Discount Furniture. And we'll finish it up with, how about those Patriots, baby? And hey, the Seahawks, going to be a good one, quite a game. Gotta love the snow. Super Bowl in 2 weeks. Patriots back at it. Folks, thanks so much for tuning in. Have a great day. Have a safe day. I'll see you at 3 o'clock this afternoon for the Tom O'Brien Show.